Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin, and today is Wednesday. Second day for this week with the market open, and today we came back down, unfortunately, right? I was hoping to see another green day today, and I'm still expecting to see at least one green day, one or two green days this week, only 2 days left. But before we get into it, you guys make sure you like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. All right, so let's talk about it. Today the markets are pretty flat, right? Today the markets are pretty flat, and we didn't really make a lot of money, but there was all kinds of opportunity out there. We got the Dow Jones down today at 0.54%, the S&P 500 down 0.75%, the Nasdaq down 0.72%, and the Russell down 0.49%. One thing that I really like to see was this VIX coming down, which means our fear and greed is going back towards that neutral point. But I'm assuming there's still a lot of fear, uncertainty, and doubt in the markets. So let's go ahead and check that out, right? Looking at the fear and greed, we got a 26 right here. We know yesterday the joke was at like a 21, I believe, 22 actually, when we looked at it. So now we see it sitting at a 26, meaning things are coming back, supposed to be coming towards the bullish side, but we're still trading a little red. So it's just something to be aware of. One thing I did find in this article, stock futures fall slightly as investors dwell on the health of the economy. And I had a couple sections in here highlighted that I think were mainly the most important pieces, right? So sentiment was heavy after JPMorgan CEO Jamie Dimon, hopefully I'm not saying his name wrong, warned that an economic hurricane caused by the Federal Reserve interest rate hikes and the war in Ukraine is brewing. He said his company is going to be very conservative with their balance sheet. On top of that, new data suggests the economy is still running hot. The numbers of April job openings released Wednesday declined sharply from the previous month, but the findings suggest that the job market remains tight. Further, the Institute for Supply Management said its manufacturing PMI came in at a 56.1 from May, up from 55.4 the month before. So main thing I want to start with JPMorgan CEO, right? Because I read a longer article from him. He actually made quite a few statements. He believes that due to the war in Ukraine, of course, right? We know that gas prices, oil prices are constantly increasing. On top of the fact that the housing market is being affected right now due to these interest rate hikes. So that was his point. Interest rate hikes are affecting the housing market, and the war in Ukraine is affecting oil and gas. Those are two major commodities that play a role in inflation. And the Fed trying to do their thing to battle all of this while still pulling out their money out of the stock market, right? So bonds, they're decreasing the amount of money that they had in the markets, right? So they're pulling out all the money they were putting in. So these three major things is what he believes is what's going to cause this economic hurricane, and Jamie Dimon's words. Hopefully, again, I'm not saying his name wrong. And honestly, I'm kind of agreeing. Like I told you guys, I see short term, we see some green days. But if things continue to go at the rate they're going, if we don't see a major change within the month of June and July as far as the inflation, I think it could get really bad. Now, whether it's a Hurricane Katrina hurricane or whether it's just one of those hurricanes that never make it on land, who knows? But it's definitely been bad. I mean, it's been bad. It's already been historically said that this is the worst first 7 to 8 weeks for the stock market in a while, right? In several years, decades maybe. So I think it's definitely something for us to pay attention to. A point I want to make about the housing market. I myself, I pay attention to these type of things, right? Because I've been looking around. What I'm starting to see is more and more houses going on sale. I know there was a point where you couldn't find a house on sale because people were buying it up that quick. They were buying it up like that. Lumber prices coming down. I even have an article here for that. Lumber slumps to 7-month lows as housing market bears brunt of rate hikes. So even lumber prices are going down. I worked, many of you may not know this, but about 2 years ago, I worked at a lumber mill for a year. And I mean, we were on the go. Lumber prices were sky high. We were making millions. They were excited about it. And now you see this, right? 7-month lows as housing market bears brunt rate hikes, and they don't see a bottom coming soon. So I mean, you guys just look it through the news, right? Look through the news. Even in the full article about the JPMorgan CEO Jamie Dimon, he stated that he believes that oil prices could get as high as, I believe his numbers were 125 to 175, $125 a barrel to $175 a barrel. And we know, we can look at it, right? Let's look at it currently. Currently, we know that the barrel of oil is sitting at 112 and 113. It actually came down today, but it was sitting at about 115 and 116 on yesterday when we checked this out. So I'm seeing, you guys, a lot of volatility, a lot of different crazy stuff going on in this market. And I think we should be definitely bracing ourselves for it, especially when these big people, the ones who are being paid, their entire job is to sit back and watch this stuff and see what's going on. So I think it's very important that we kind of, follow them, see what they got going on. And the housing, I've been stating since the beginning of this thing that this is the transfer of wealth, right? And one of my, I guess, analogies was, this is our opportunity to buy the cheap houses. Well, where it was an analogy, this is becoming literal now. So, housing bubble, many people are predicting another housing bubble similar to 2008. So maybe you could, if you're looking for a real estate, or if you're looking to buy your first home, this may be the perfect time where prices come down to affordable prices. Of course, the loan may be crazy, but if you buy you a house now, refinance 5 to 10 years at those lower rates, when interest rates come back down, you won, right? You had, that's that transfer of wealth. Of course, it's not immediate, but it takes time, and you're working into that. These oil prices, you guys, really, there is no predicting how that's gonna go. I mean, until we figure out this thing with Ukraine and Russia, or we figure out alternatives like electric vehicles, EVs, or whatever the case may be. Even though that's just a small portion of it, until we figure out alternatives by producing our own oil or something like that, these prices could possibly continue to just go higher. And we've been seeing energy companies making bread. I mean, they've been booming for the past, I guess, 6 months now, since this year's began. Really, since the Ukraine thing happened in February. So we're seeing a lot of different movements. We're seeing the rotation just so crazy, it's kind of hard to predict. But you guys know what our plan is, right? We continue to dollar cost average through this thing. We'll continue to be patient. We'll continue to make money through it. I did tell you guys that I would have you a options play for the night, and I'm about to pull that up now. So here we have our options play, right? And this is just the SPY. So this is me playing the SPY. It could cost you a few $100s, or you can go further out of the money and get even cheaper, options. However you decide to do it, always buy something using money that you're willing to lose. But right here we have the numbers, right? We have our range. So here I have call options starting at 412.52. So if I see this thing is currently sitting at, SPY is currently sitting at 409.59. If I see SPY come above that 412.52 with a retest, that means I want to see it come up. Let's draw it out, right? You guys know we gotta draw it out. If I see SPY come up, that's not the right one. Let me find us a good one. So polyline, if I see SPY come up, I want to see it come back down like this, and I want to see it. That's when I want to get in it. All right. I want to see it bounce off. At some point, it needs to bounce off and come back up. Of course, it's not going to be a straight line. It may be zigzag, but I want to see something like this until it gets to this point. And each one of these is actually a break even, a price target for me. So if I buy 3, I'll have 3 here. I'll for sure sell 1 here. I'll set my stop loss. If I see it hit this, I'll sell my second one. If I see it hit this one, I'm getting all the way out of there. And I'm having a tight stop loss on this thing the entire time. If I get into a call at 412.52, I only want to see myself possibly lose about 10%. And of course, I'm playing with money that I'm willing to lose. On the opposite side, right? On the opposite side, if you see this thing come down to the 407.52, right? 407.26, I'm sorry, 407.26. And it comes back up, I need to see it come back down below this line before I start buying in. And at this point, I have a put option. I only have 2 price targets here, but just same thing. If I see it come down like this, I'm in my put option. I may buy 1 or 2 affordable put options, further out of the money if I want to get them cheaper, or in the money if I want to get them more expensive. But I'm definitely going to enter here, put entry here at the retest. So I will enter here. This is my retest. I will enter here. So I see it hit this line. I see it come up. See it come down, I'm entering right here. Same thing over here. If I see it come up, I see it come down, I see it come back up, I'm getting in, right? I'm getting in between here at some point. So this is the options play, right? I just noticed you guys may not be able to see all of this, so let me minimize this. But this is the options play. If you take this one, make sure you take a screenshot of it. Follow it the best way you can. 20% profits, right? Even if you see 10% profits, if it's enough, if you feel excited about it, you're happy about your first option, sell it. Take your profits, get in, get out. Have a good day. And I usually trade within the first hour. So within the first 15 minutes, I'm looking at this thing and seeing, hey, do I want to make this trade? And I usually check it out on the 5 minute if I'm looking at it. After that, I make my decision. If things are trading sideways, I do not take the play. If it does not hit my call entry or my put entry, I do not take the play, guys. So that's just something to be aware of. Something to be aware of. So that's what I got for you guys. We got our first option play. Hopefully some of you guys are successful. I'll be planning to trade this one with you tomorrow. If not this one, I'll definitely be taking something else. But it's definitely this is gonna be our basis on how we make money, right? If the SPY goes up, normally the rest of the market go up. If the SPY goes down, normally the rest of the market come down. So I want you guys to be aware of that. I thank you guys for joining the Journey to Become Wealthy. Hopefully you enjoyed this video. I hope you make some money tomorrow. I'm definitely gonna check in. I'll see y'all later.